and look at these five companies, Mitsui and Mitsubishi and so on, and you look at their stock prices in August 2020, they were hitting multi-year lows. In fact, the filing came out on his birthday. On August 30th, 2020 is when the filing came out. I think it was Warren's way of celebrating his birthday. And it came out like basically all of them had gone just over 5%. So he must have been accumulating and gotten all to 4.99% on August 29th. And then he bought a few shares and the filing was made on August 30th, just kind of keep all the, symmetry and all that. And now he did a couple of interesting things with this Japanese bet. First, he didn't put up any capital. So he invested, I believe, about 5 billion, and he borrowed the entire 5 billion in yen in Japan at 0.5% interest per year fixed. And these five trading companies had an 8% dividend yield. Okay, so basically he was going to be paying on 5 billion, about 25 million a year in interest. And he was going to be collecting about 400 million a year in dividends. Okay. And of course they were like a very low single digit P's and all that and very long histories. These companies have been around for, decades and decades. And of course, he visited with Greg Abel, I think last year, maybe earlier this year. I'm fuzzy on that. I think he went earlier this year to Japan and he met all the five companies and he's bumped up the positions now. They're about 8% or so each. And what has happened in the last 3 years since that filing is all of these stocks have doubled or quadrupled. Okay, so they've gone up 2x to 4x. All of them have doubled their dividend. So the 400 million dividend is now 800 million. And the 5 billion is like, maybe 12 billion something. Okay. And the return on equity on that bet is infinite because basically there was no equity put up, and if you look at, so, if you look at the 2022 letter that Buffett wrote, which came out this year, he said that, in 58 years of running Berkshire, there have been like 12 ideas or 12 things that he has done that have moved the needle. These 12 decisions have created with the Berkshire that we know. And it wasn't like he made 12 decisions. He made hundreds of decisions. He bought hundreds of stocks. And one of these 12 decisions, I think, is, for example, hiring Ajit Jain. And the other 11 are either marketable securities like Washington Post or Amex or Coke, or their wholly owned subsidiaries like, Mid-American and Burlington Northern and National Indemnity and so on, Seas Candy and such. And so anyway, basically, he says there was a good idea basically on average once every 5 years. Okay. Now, if we look at the last several years for Buffett, the two ideas that really stand out in terms of what he's done have been Apple and the Japanese bets. Those have been, if I go back over the last 10 years, for example, I say, okay, in the last 10 years, what are the two best things that Warren has done? It's probably these two. Now, the Japanese bets are not that big because in the broad scheme of things, at Berkshire, it's small, but he's tried to bump the bets up. And so basically, there are some lessons. I think there's some important lessons here. One is that while we, when we run investment funds or running some pool of capital or whatever we're doing, we're sifting through, we're looking at under a lot of rocks to find anomalies or whatever else. They are extremely rare. Okay. So what I'm saying is that, the average stuff that you might find looking around, something is worth $20 and it's trading at 14, and it might grow at 5 or 10% a year or something, you know, those might be the best things you find, but those are not what is going to move the needle. What is going to move the needle are the anomalies. And so investing is hard because, like, Munger says, take a good idea and take it seriously. These ideas pop up at very random times, in very random places, in a very unpredictable way. And our job is to be vigilant, to know when we have something amazing in